If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to Courtside Financial, the podcast where we talk about business and technology. I figured today's episode would be the perfect day for another rewind episode because there's all this conversation in the market right now about will NIO go bankrupt? And I feel like I've kind of addressed these things over the years, and I still hold the same opinion today that I held yesterday per se. So I want to flash back to an episode I did back in March, and I also want to flash back to an episode I did about 3 or 4 years ago where I reacted to Financial Education's video on NIO and how the stock took off like 900%. I think this was back in 2020 or 2021 when NIO had all these fears in the market about going bankrupt, and then they actually got saved by institutional investors. Now that'll be the worst case scenario, but based on the video I did back in March, kind of discussing the numbers and how the financials and how much runway NIO has, my opinion is that I don't think that will even reach that point anytime soon. So it's not a near-term concern for me, but anything's possible here, right? So I do think that the company is going to be around. I don't think they're going to go bankrupt, and I tend to believe that history repeats itself, and I think we're setting up ourselves for an history to repeat itself again. We'll see. Who knows? NIO has a lot of things to get in order. We cannot deny that. Bankruptcy is a valid concern. I'm no expert, but I do think that history will repeat itself, and that's my novice opinion, right? I'm not a guy on Wall Street. I don't have a crystal ball, but that's certainly what I think about the stock. So I think that these two episodes where I spoke on this in the past, I think those still hold relevant, and that is my opinion on whether NIO will go bankrupt or not. So without further ado, let's get into the episode. But actually, we'll take a pause because before we get into the episode, make sure you hit the like button, make sure you hit the subscribe button. We're trying to get to 10K subscribers before the year is over. If you could help us out with that, that would be amazing. Click the notification bell icon and leave a comment down below. All your engagement really does go a long way in helping out the channel. All right, so without further ado, let's get into these two flashbacks. Thank you. About the time one of the YouTubers who I actually started watching in the stock market spoke on NIO. He speaks on Tesla a lot, so he is coming from a little bit of a biased opinion as of the time that he gave his last thoughts on NIO. Me personally, I feel like just in life in general, and also of course in investing, one of the smartest things that you can do is change your mind when it makes sense, and when it's applicable. You obviously don't want to change your mind too often. I also wonder if his opinions changed since the time that he posted this, as this was like 2 years ago or so, I believe. I'm sure a lot of you are familiar with him, Jeremy from Financial Education.
This is how you have a stock go up 1,000% in 7 months, okay? This is the perfect storm scenario. Have everybody think the company's going to go bankrupt, then a flood of money comes in the stock to basically save the day so the company can make it through, okay? Then go ahead and post actually really impressive numbers, and then have Wall Street come behind you like left and right. Like, this is the perfect storm, literally the perfect storm to get a stock to go up 1,000% in 7 month span. Unbelievable, okay? But what?
That's pretty much a good summary of everything that happened. In the beginning of his video, he does go into like more in detail on all these things and talk about them specifically, and he pretty much summarized it up all well. There were definitely bankruptcy fears. I just figured that I would listen to what William Lee was saying. I just figured that China wasn't going to let this company fail like that. But looking at the numbers alone, that was a really big fear.
What do I think about all this? All right. Well, first let's get into the good before we get into the bad, and then I'll give you kind of my full opinion if this is a stock I'm interested in buying, watching, short selling, anything like that. Okay. The good. Almost all new car sales will be EVs in 2030 and beyond, in my personal opinion. And guess what? NIO is an EV maker in China specifically, which can arguably be the biggest market for EVs over the long term. And that is phenomenal news. You guys know I've said this many times on the channel
Yeah, I tell people this all the time, like, eventually we are not going to drive gas cars. Just like Jeremy said, pretty much NIO is a growing product in an industry that's growing. You put those two together, in my opinion, the numbers only can get better over time. Growing product, growing industry, two big variables on the side of NIO.
Past couple years that I just don't foresee, especially, I mean, even in 5 years for me, it's hard to see this scenario, but never mind 20, 30 and beyond. It's hard for me to see a human going to a car dealership and saying, hey, can you please give me one of those internal combustion engine cars? Like, no, okay, that's just not happening.
As a matter of fact, where are my car keys? I mean, the car's perfectly fine, there's no problems, but I've been putting away some money and it's time for me to buy a new car, and I'm thinking, should I just wait? Because I don't really want to buy a gasoline car anymore. If there's no problems with my car, I might as well just ride it out instead of putting all that money into an internal combustion engine. And I know I'm not gonna want that car in 5 years, because with me, I like to buy cars for the long run. I feel like that's the best way to get the most out of your money. Leasing, you're paying for the depreciation, and I definitely don't want to overspend on a car right now. There's got to be other people like me right now who are in the same situation, and they're in the market for a new car. They want an electric car, but they don't want to overspend on a car right now. So I do think that once price points start to come down, a lot of people will move into the electric vehicle market. Tesla has their way of making them more affordable. NIO has their own way of making it more affordable. We've talked about those things on this channel, but back to Jeremy.
Okay, it's just not happening. I mean, literally in 5 years from now, it's almost impossible for me to foresee that. Never mind 10 years down the road. Like 90 to 99% plus of cars sold 10 years from now will be EVs. There's just no doubt in my mind. People aren't going and saying, I want an internal combustion car. Everybody's garages in the future will look like my garage, where they have EVs parked in, okay? If they even have cars, which keep in mind, with autonomous taxi networks, some folks might just decide not to even get cars or own cars themselves. I think there will always be a segment of the population that wants to own their own cars that they can drive anytime, but there will definitely be a huge segment of the population that won't even buy cars. But when those people get into those cars, I can almost bet you any money they're gonna be electric vehicles, okay? Revenue estimates, look at this. 98, almost 100% growth expected in current year. That's amazing, okay? Especially when you just talk about like vehicle sales being awful this year for most companies out there. To post 100% growth would be insanely impressive. Let's just put it that way. Look at next year. They're expected to grow another nearly 80% next year. That's extremely strong growth, needless to say. That's unbelievable.
And I think NIO's gonna grow more than 80% next year, to be honest.
Okay, then you have this. This is some more good news, okay? Look at, the numbers are getting closer and closer to break even. So basically, year ago, they lost $1.50. This year, they're expected to lose 72 cents per share. And then next year, they're expected to lose 47 cents per share. Those are still really big numbers in terms of losses, but they're getting better and better as long as, things continue to progress. They should get closer and closer to break even, which is obviously,
like I always say, like, the loss continues to narrow, and we're really looking forward to this Q3 earnings call. I think that's going to tell us a lot.
A sign you want to see if it's a company you own. And then also, for the good, they have a ton of backers. Like, look at that. The company's raised $3.6 billion. That means there's a lot of companies and a lot of investment funds and investors in general that have NIO's back, that want to see this company succeed over the long term. I mean, just countless backers, okay? And that's a very good sign, especially in a space like this with a company like this that's losing money, but ultimately having some really impressive numbers, all right? Now,
not to mention that one of the backers is the Hefei government of China. That's a really big thing for NIO. Tencent is also one of the backers. Like I said on this channel before, Tencent doesn't just throw their money away. They're looking to get a return on their capital. So a lot of NIO's backers are serious about this, and we're seeing Wall Street finally just begin to take it serious.
Now let's get to the bad, because there's definitely some bad in relation to this stock, all right? Look at the net loss. This is for just their most recent quarter. We're not even looking at last year. We're looking for the most recent quarter they just reported a couple months ago, okay? Net loss came in at $166 million. So the losses are, getting a little less, but it's still massive. I mean, that's still a lot of money to lose in a 3-month span, especially when you put up some pretty impressive numbers. There's no doubt about that. That's tough, okay? But that's not the worst part.
So he's talking about Q2, obviously. Q3 was their best quarter yet, so let's wait for the Q3 earnings call to see if the net loss is decreasing still. There's a lot of things that are costing NIO a lot of money, like for example, the NIO homes probably cost a lot of money to operate. For the battery swapping stations, like I said, for every station they have to keep a technician on payroll. So yeah, the loss could be better. Automotive is capital intensive. NIO's doing a lot more than just cars. We'll see what they say in the Q3 earnings call. My expectation is that the loss is getting better. President Lee Hong-Quinn said that they have to be doing double what they're doing right now to turn a profit. So we'll wait and see. I think he said the expectation or timeline for that is 2 years. And it's not going to be just dependent on the cars. It's going to be dependent on all the products and services they offer. So we'll have to wait and see on that.
Okay, the worst part in my opinion is kind of how I see the competitive landscape growing over the next 5 to 10 years in China specifically. Remember, NIO is going to be mainly a Chinese player. It doesn't mean they can't expand to more international markets, but I think the bread and butter of NIO's market long term will be China, and the competitive landscape is going to be, I think, ugly there, okay? You're gonna have a ton of players in China making vehicles at the low end and basically undercutting NIO's prices. That's what I foresee, okay? A lot of companies basically racing to the bottom and trying to create the cheapest EV, the most affordable EV, and trying to come in with, price brackets of, let's say, 15,000, 20,000, 25,000. I see a lot of companies that will be in China that are gonna try to basically undercut a company like NIO.
And that's fine, because we've talked about NIO's positioning before, right? NIO is not trying to win on price. They're not trying to be the lowest. Their target market, for example, they're a lifestyle company. They focus on quality, and they're a premium electric vehicle maker. Premium companies that sell premium products don't really win on price. So there, for example, President Lee Hong-Quinn, when he talked about why NIO doesn't sell a car with a single motor, he said that's fine for lower end car companies, but for a premium car company, it just isn't the right choice. And when he further clarified, he said, because if you think about an airplane has 2 engines in case one fails. So a premium car should have 2 motors in case one fails. It's a safety thing. Now, if NIO was a company that was trying to win on price, their cars would only have a single motor. So it's things like that. So I don't really see lower end car companies as a threat with the way NIO's position themselves. And also, not to mention that the automotive industry is capital intensive, like we always say. So if you're making a crappy product, I don't think it's gonna last long. I don't think it's gonna last long. So it's gonna be really hard for companies who just wanna undercut someone and not be innovative in this space to survive.
I think there's going to be a countless amount of them, okay? It doesn't mean those companies will win. I just think it's going to be extremely competitive price-wise. If you're not competing because you have a super strong brand, you're going to be competing on price, and you're going to try to undercut whoever you have to, which is obviously NIO in the situation. So if you're thinking about like competing at the, let's say, mid to low end, I think it's going to be probably the most competitive market for EVs in the entire world, in my opinion. I think it will be the most competitive in China, okay? But not just that. So you're getting cut from the low end is how I see things going. But also, if you're competing at the mid and the high end, you gotta compete with Tesla. And Tesla is a no joke competitor as far as a company you're competing with, essentially, okay? Remember, Tesla already has massive brand in China and massive supercharger expansion going in China right now. They're expanding superchargers everywhere, and those superchargers, that makes it a lot more convenient.
Okay, so he's talking about Tesla and the supercharger network, but we all know that NIO Power offers the most recharging solutions to EV users, period. They have the battery swapping, which the government is also helping NIO to build out more battery swapping stations. And now if you want to talk about the supercharger, NIO has their power charger, which I believe as of July, they had somewhere north of 250 power chargers all across China already. And they just announced their power up plan, which they received 100,000 RMB in subsidy from the Chinese government to build out infrastructure all across China. And in that power up plan, the power chargers are included with the 20 kilowatt hour DC chargers. So there's a lot of options for NIO users. As of October 3rd, NIO has over 35,000 chargers in this network already. They're not all power chargers which can charge your car in about 30 minutes, but we got to remember that the government is planning to help NIO out and deploy another 30,000 chargers. So that government backing piece is really important. They're also working on the battery swapping stations. So getting your car charged, if you purchase a NIO vehicle, is no big deal at all. And also those 20 kilowatt hour chargers, you can buy one, take your car home and charge your car in about 3.5 hours. There's a lot of solutions here. And on top of that, aside from the battery swapping, NIO's technology isn't only available to NIO users, right? Most electric vehicles which are up to national standards can use NIO's charging technology and also refuel their vehicles. And we heard William Li say that the charging stations are already profitable. And then the battery swap, since October 12th, they've begun charging some customers for battery swapping, which is also going to generate revenue. So the government's working with NIO to build charging infrastructure. So I do think that they can compete with Tesla on that front, to be honest.
For customers to go ahead and buy your product, use your product, and it's phenomenal for branding as well. And that was just announced this past summer, a massive supercharger expansion, okay? Not just that, Tesla already has a massive amount of superchargers in China. Like if you go to Tesla's website and go to Tesla superchargers in China, like the list is crazy big, okay? Just what they have now. Look at this map here, okay? I mean, the amount of superchargers all around China, I don't think there's gonna be a company that can compete with the supercharger network in China. The same way, no one's even remotely competition in the United States because no one has the type of vehicles Tesla has, the type of mileage, all those sorts of things, but also no one has the supercharger network that Tesla has in the United States. So no one can compete. It's just a huge moat around the business because it takes billions upon billions of dollars of investment in years of basically building out these supercharger networks, and Tesla has it in China, okay? Never mind the brand. And then as I've always said when it comes to Tesla, I think China could be a bigger market for Tesla than the US and EU, which means essentially if I believe that, there's a good chance Elon Musk also believes that, as well as the other executives at Tesla also believe that, okay? I think, very much so, like China could be potentially the biggest market for Tesla. And if that's true, that means Tesla's gonna be as competitive in that market as any market in the world, if not more competitive over the next 5 to 10 years. Look at this, Tesla's China-based Model Y is gonna start at $41,000. You get ready for some numbers to be put up there. Remember, Tesla has an unbelievable brand, an unbelievable respect for their brand in China. Elon Musk's brand is actually really large. It's probably one of the biggest business legends from the US in China, if not the biggest. I can't really think of anybody off the top of my head that's respected as a business legend in China bigger than Elon Musk, okay? So, this is gonna be a lot of competition. Look at this. This just came out about a day ago, right? Tesla cuts prices of Model S in the United States, but also guess where? China specifically, okay? Cutting the price of Model S so it gets even more competitive. I wouldn't want to compete with Tesla on the mid or the high value cars. Let's put it that way. That's tough. This guy right here, he's a very dangerous businessman.
Okay, so he talked about the price cuts. I actually did a video on Tesla's price cuts when they did even more price cuts on the Model 3. A lot of people were worried, like, how is NIO going to compete? But it all goes back to positioning. Now with the Model 3, that's a sedan. NIO only sells luxury SUVs up to this point. On NIO Day, they plan to announce a new sedan, so we'll see what price point that comes out at. But it is manufactured in China, so we'll see what the prices are. So right now, it's not about beating Tesla. NIO's still in its early days. Consumers want a variety of choice. This is a growing market, and I think there's enough market share for both companies. There's enough room for Tesla to be number one and for NIO to be number two, and vice versa. Tesla has the luxury of being able to cut prices right now. NIO is still in its early days. but that doesn't mean that they don't make the vehicles affordable. We have battery as a service, which gives consumers the option to lease the battery and buy the car, so that the upfront cost of ownership is a lot cheaper, making it more affordable to a wider market. So there's things like that come into play, and then both companies benefit from subsidies as well. He talked about the Model Y too. I believe the EC6 is already putting numbers on the board. We can't see that right now because of as September, they only started delivering it in the last 5 days. They delivered 16 for September, but there is a strong order backlog, so we expect there to be a very high demand for the EC6. I even read an article in the past, I forgot where it's from. I believe it was from maybe MarketWatch or Investor Place. They said you should invest in NIO because competition with Tesla is not a zero-sum game, and the entire market is not going to just go to Tesla.
Okay, if you're competition, he's a very, very dangerous businessman to be competing with, okay? And here's why. He's got the brand leadership. You can't touch his brand anywhere in the world, especially in China, okay? And it doesn't matter. Any car you try to stack against a Tesla, Tesla's gonna win, just straight up. So he's got the brand leadership. He doesn't care about short-term profits. This is very big, okay? Doesn't care about short-term profits. And he's going after market share, which is why he goes ahead and cuts the price of the Model S. He's like, hey man, we don't need to make too much profit on that. Let's go after market share. Let's get more Teslas in more people's hands so they go ahead and tell friends and family how awesome Teslas are.
I think that William Li doesn't care about short-term profits either. Otherwise, they wouldn't be talking about global expansion, you know. They would just stay in China and try to squeeze the most out of that market. We know that in the back half of 2021, they plan on expanding to Europe. Eventually, they want to get to mainstream markets. He said he has ideas and thoughts about the US already. In the short term, they don't care about making the company profitable. They rather hold out, you know, they rather put that money back into the company for things like focusing on expansion, put that money into the company for R&D. They even said that they put the money back into the company for autonomous driving as well. And on top of that, they're buying shares back from investors rather than just making the company, rather than just doing whatever they can to make the company profitable as soon as possible. They're setting it up for the long run, in my opinion. So I think they're doing the same thing.
That is dangerous. It reminds me of this guy. I don't remember his name, but I know he's really important. I think he might have been he's kind of like the richest person in the world. Like, guy had a divorce, lost a bunch of money, and somehow he's still the richest man in the world. Like, that guy's special, right? Brand leadership, caring about market share over short-term profitability, okay? So that's tough, okay? The competitive landscape is going to get ugly, I think, over there in the next 5-10 years. But then you look at this. NIO has a very rich valuation on it. It's not like it's a cheap company like it was, some months back. It's got over a $34 billion market cap on this company right now. Over $34 billion. We're looking at a price to sales ratio on this company of about 30 right now. That's, there's no other way to slice it. That's really, really dang high. A lot of people say Tesla stock's overvalued, right? Tesla stock's trading at a price to sales of 16. NIO is younger than Tesla, but Tesla also has way better technology than what NIO has. A lot of stuff NIO actually outsources, whereas Tesla's vertically integrated. They obviously have brand leadership in the EV space, the energy space. I don't even think you should really compare the two companies. And Tesla comes in at, almost a half of the price to sales ratio versus NIO, okay? So for me personally,
I agree with him that on paper, NIO is overvalued, but NIO is also working on a lot of things for in the future. Their robo-taxi network, their battery asset management company, NIO Power, the charging stations are profitable. The battery swapping stations are going to start bringing in revenue. And there's a whole bunch of other stuff as well. So obviously, like you said, he's 100% right. These companies are at two different stages. They shouldn't really be compared like that. I think for me, it's just Tesla sets the benchmark, but I think NIO has a lot of time to progress and to make things happen. And I think the future is going to be very exciting for this company. For me, NIO is a story stock, and it goes outside of just using valuation metrics. And I think that's what happened with Tesla. A lot of people have been screaming Tesla's been overvalued for the longest amount of time. And I think Tesla is a story stock as well. And you don't buy, in my opinion, you don't buy story stocks on what they are. You buy story stocks on what they could be. and their long-term investments. With that being said, at this price, am I still buying NIO? Yes, because I'm dollar cost averaging, so I'm not timing the stock anymore. I did that for quite some time and I made really good buys, but now this thing's gotten way out of control in my opinion, and I'm just dollar cost averaging. So by default, I'll buy less when the stock goes up and I'll buy more when the stock goes down. And then if there is a big correction, I can make bigger buys. But that's my personal strategy with it. If I believe in the company and I think the company is going to grow over the next 5 years.
I will not be buying NIO stock, but I will be watching NIO stock. I'm not I'm not going to short sell a stock. Heck no. And I'm also not going to buy the stock. I'm just going to watch NIO stock. I think it's pretty interesting. I love the growth NIO has. It's amazing growth, no doubt about it. I love that they're an EV player and an EV player in China. I love that they have big backers that have financial interest in China. In NIO succeeding, I think that is absolutely massive. I don't like the valuation, okay? And I don't like the competitive landscape specifically in China, but in EVs in general, but specifically in China, I think it's gonna be the most competitive market for EVs in the entire world. There's just no doubt in my mind. I think those players are gonna be cutthroat over there. I think it's gonna be tough, let's just put it that way, okay? And so ultimately, I will be watching NIO stock. I'm gonna keep track of this. I will keep it on my stock tracker app. And who knows, maybe someday I do buy this stock. But as of right now, at least, it's not a stock I am interested in personally buying. And to anybody that has bought it or wants to buy it, I wish you all the best. And I hope you make a ton of money in this one. But for me, I would just rather be in Tesla stock. It just feels a lot safer and you still get massive growth over the next decade or two.
And I agree with him. I think that was overall a fair analysis of NIO. I think, like he said, I like the growth. I like NIO as a company. The backers are super important. The valuation is high. He said he doesn't like the competition. I do disagree on some aspects, and it's fair for him to say that he's watching, not buying. We know Jeremy has a lot of exposure to Tesla. Does he need any more exposure to EV? Maybe, maybe not. I think it was definitely a fair analysis. Overall, the market will be the judge, and we'll see where this thing can go in the next 3 to 5 years. And obviously, one thing that I want to add is I do think Tesla is a safer play. I do think Tesla is definitely a safer play, and I do think that they've outlined a lot more growth for the future than NIO has outlined. It's like I say, it's because it's not all about the cars. We got to think about Tesla solar. We got to think about Tesla as one of the best battery companies in the world. We got to think about Tesla insurance. There's a lot of other factors, but NIO has a lot of other factors as well. While they might not be as big as Tesla, these companies are at two different points. But the reason I invested in NIO is because they're earlier in the organizational life cycle, if you understand that at all. So we'll see what happens. I wouldn't mind having exposure to Tesla as well, as I am an Elon Musk fan as well. It's not like I'm rooting for one company against the other. I like both of the companies. I'm just invested in NIO, and I just want success for both of the companies. We'll see what happens, but overall, great analysis from Jeremy.
Questions swirling around about its financial longevity. But fear not, dear listeners, NIO's bank account is far from empty. With cash reserves of 57.3 billion yuan, NIO has enough cash to make it until October 2025. And that's even if the losses keep mounting at a 43.5% year-over-year clip. Now let's dissect the battlefield. In the midst of what can only be described as the new energy vehicle price war, NIO stands firm, refusing to join the fray. While competitors continue to slash their prices left and right, NIO standing on a strategic position of delivering value over racing to the bottom. Now, what about the competition? Li Auto boasts a cash reserve of 103.67 billion yuan, while Tesla boasts a track record of longer profitability. Xpeng is lagging behind NIO in reserves. However, they're managing to keep their losses at bay. The battlefield where each opponent wields its own set of weapons, from the hefty chest of traditional giants to the nimble strategies of these upcoming EV makers. As NIO navigates these turbulent waters, questions arise about its arsenal for the future. There's an introduction of the sub-brands. These are both hinting at a broader market strategy. And that strategy is being able to keep the premium brand while expanding with the sub-brand into different market segments, being able to reach more customers and serve more users, and ultimately reaching scale, which is going to bring costs down for NIO if they're able to succeed. NIO's poised to capture a broader audience without compromising its premium image. But amidst the fog of war lies a beacon of efficiency. NIO's journey to profitability hinges on its ability to streamline operations and rein in costs. From R&D investments to service centers, every move has to be scrutinized for its contribution to the bottom line. With a keen eye on efficiency, NIO aims to turn its losses into profits one day, paving the way for continued success in the electric vehicle arena. And there you have it, folks. NIO's journey is one of strategy, determination, and unwavering resilience. As the market evolves, NIO stands poised to weather the storm and emerge stronger than ever.